The man who controls the words scrolling in front of the President of the United States had a secret side bet going, and it was on the President himself, Gabriel Perez, who has run Donald Trump's teleprompter since 2016, allegedly won more than $100,000 betting on the outcomes of Trump's own speeches. He placed those wagers on Kalshi, a regulated prediction market where users can bet real money on real-world events, from elections to economic data. It was Kalshi itself that noticed the unusual pattern and quietly flagged the trades to regulators. Now Perez is reportedly in settlement talks with the Commodity Futures Trading Commission, the agency that oversees these markets, over what regulators may ultimately view as trading on inside information. The case cuts to the heart of a fast-growing industry, because prediction markets are booming, yet almost no one has drawn a clear line on who is simply too close to the outcome to be allowed to place a bet. One of the most feared and secretive firms on Wall Street just placed its first big bet on a crypto exchange. Citadel Securities, the giant market maker founded by billionaire Ken Griffin, has invested $400 million into Crypto.com, one of the largest exchanges in the world. The deal values the company at roughly $20 billion, and it marks the very first time Crypto.com has ever raised money from an outside institution. Citadel Securities is not a household name, but it quietly handles an enormous share of all the stock trades made in America every single day. For years, Wall Street's biggest trading houses kept crypto at arm's length, wary of the wild swings and the regulators watching over them. Now one of the most powerful forces in traditional markets is buying itself a seat at the crypto table. It is another sign that the wall between old finance and digital assets is dissolving, one enormous check at a time. The panic that started in AI stocks has jumped the fence, and this time it is dragging Bitcoin down with it. A wave of risk-off selling that began on Wall Street, set off by a sharp pullback in high-flying AI names, spread into crypto this week and pushed Bitcoin below $63,000. But the pressure is not only coming from the outside, because fresh on-chain data shows the selling is being driven from within. Roughly 2/3 of the coins now flowing onto exchanges belong to long-term holders, the patient investors who normally sit perfectly still through the storms. And many of them are now selling at a loss, a sign that even Bitcoin's most committed owners are running low on conviction. Market sentiment has slid firmly into fear, sitting near its most anxious levels in weeks. Fear has taken a firm grip on the market, and the question is no longer just what is falling, but who is still willing to hold on. Subscribe now.